Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of why you may consider disclosing offshore assets to the IRS. To begin, offshore, when the IRS is using the term, is not, you sipping away in a margarita or a colada in the middle of the Bahamas. It's anything outside of the U.S. Think overseas, abroad, international, foreign. It's all just out of the U.S., okay? And like anything else, why do you want to disclose? Possibly if you haven't before, because you don't want to get in trouble, right? Each year the IRS has various compliance efforts in order to really enforce and push the point home, and offshore has been on there for a while. It's been part of the Dirty Dozen for many years. So why don't we take a step back and just kind of go through the basics of what offshore reporting is. So what happens is if you're a U.S. person, that means you're a U.S. citizen, legal permanent resident, or lawful permanent resident, foreign national who meets the substantial presence test, and you have assets, investments, accounts, or income outside of the U.S., you have to disclose them. Now, two of the more common forms you'll hear about a lot is the FBAR. FBAR is Foreign Bank and Financial Account Reporting. It's reported each year annually, electronically, online, on FinCEN Form 114, and since 2003, the IRS has taken the reins on enforcing compliance with that form. That form's been around for like 50 plus years. More recently, another acronym we hear a lot is FATCA. FATCA is the Foreign Account Tax Compliance Act. For U.S. persons, not the foreign financial institutions, but taxpayers, when they're filing, they will report that information on Form 8938. The FBAR is used to report maximum value throughout the year. Form 8938 adds on to that, so not only is it the maximum value of the asset, but additional information such as has there been income generated, and what type of income is it? Is it interest, dividends, capital gain, royalties, et cetera, et cetera. It also asks some more specific questions. Did you open the account in the year? Did you close it? Does it generate taxable income? Do you own it with a spouse? Things of that nature. So it's a little more detailed, and FATCA goes direct to the IRS on the Form 8938 when you file your tax return. There's other more involved, boring forms depending on what you've got. 8621 is for passive foreign investment companies like mutual funds and SICAVs. 5471 and 8865 are things like foreign corporations and partnerships. Depending on what category of filer you are, the exercise of preparing the form will rank from relatively minor inconvenience to super incredibly annoying and time intensive. So how does the IRS find you, right? Because if they can't find you, who really cares? Here are three common ways and there's other ways, right? But here's three ways they do it. FATCA, as we mentioned before, the U.S. has entered into more than 110 FATCA agreements, and more than 300,000 foreign financial institutions currently report to the U.S. government. So you're a U.S. person, you have accounts in country A, that foreign financial institution may report the information to the IRS. Now they've got the information. Either because of that or for other reasons, you're under audit or examination. If it's because of that, you may be under a reverse eggshell, and so that's something to really be cognizant of. But you're under audit, they send you an IDR, which is information document request. It says, hey, Bill, do you have foreign accounts? And you're like, oops, well, I do, so I guess I got to be truthful. Third, and a lot more common ever since the introduction of the streamlined procedures, is third-party offshore disclosure. Former spouse, former business partner, they want to get into compliance. They don't like you anymore, so they pay you no mind, and they go off and they do the disclosure without telling you. You might have been on those accounts during the compliance period, and next thing you know, the IRS has that information. So what happens if the IRS finds your assets? Okay, it depends. Not everyone gets in trouble. Most people are not willful. Even less people end up going to jail or anything like that. It's mainly just civil penalties. If the problem with civil penalties in the offshore arena are things like FBAR and FATCA can be brutal. With FBAR, it could be 50% maximum value up to 100% value of your money over a multi-year period. FATCA is a $10,000 starting penalty, $50,000 continuing penalty that go on per year, depending on how many years you're non-compliant. If the IRS finds your assets, one, with the examination and audit, special investigation, the key concern would be what's called the reverse eggshell audit. So the IRS has your information, they audit you, and they go, hey, Jane, do you have foreign accounts? And you're like, no, I don't have foreign accounts. So like, you sure? And you're like, yeah, because you can't imagine that your bank overseas will report you, but they did. They didn't tell you because they already knew you were a U.S. person when you first opened the account, so they didn't need to get a FATCA letter or certification from you. In that type of situations where you're making an intentional misrepresentation or omission, that can lead to some problems, so you want to be very cognizant of that. Once the penalties have been assessed and they're being enforced, then you got things like liens, levies, seizure, and passport revocation. Over the past year or two, we've gotten a lot more inquiries for taxpayers who have had their passports denied for renewal or rejected because of a significant tax debt. So that's something to keep in mind. Yeah, it's not that easy for the IRS to run overseas and get your money, but it does happen. The IRS works in tandem with tax organizations across the globe, like the CRA in Canada, and it's not uncommon for them to be able to collect on that money. If you're out of compliance and you haven't been audited or penalized yet, you may qualify for one of the offshore disclosure programs. If you're willful, can't certify under penalty of perjury that you're non-willful, you would do VDP, which is the voluntary disclosure program. Otherwise, if you're non-willful, you have lots of opportunities. You've got the streamlined domestic or streamlined foreign. They both refer to foreign accounts. Just domestic is for U.S. persons, and there's a 5% Title 26 penalty. Streamlined foreign, it all gets waived, which is great. It's rare that the IRS offers a program where they'll waive the penalties. They used to have delinquency procedures where essentially if you had no unreported income, you could skate by without penalties, but they changed that in November of 2020. It's still around, but it's not as beneficial as it used to be. And you can always reasonable cost statement package. We have lots of free information available on our websites and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.